Yo guys, in this video I will exactly show you how to combine the higher time frame liquidity and the lower time frame liquidity. So let's say this is the daily high, this is the daily high liquidity, and the price is moving like this, and the daily liquidity is taken out. So from this high to this low, we should not buy the market because the daily liquidity is telling to sell the market. So there is no point for buying the market. Why we should buy the market here? Because the retailers who have buy stops here, their stop losses will be here. And the stop loss means liquidity, right? So until this liquidity got taken out, we should look for sales in the market. We should only look for the sales in the market. So after this liquidity is taken out, we can again buy the market. This is how the market moves from the liquidity point to the low time frame liquidity point. So in this scenario, this is the higher time frame liquidity point and this is the lower time frame liquidity point. This is how that liquidity cycle moves in according to the lower time frame. So this if it is the 15 minutes, this will be the 1 hour structure. If it is the daily, it will be the 4-hour structure. I will show you some chart examples here. Now then you can understand how to combine both the liquidities. If you see in the marketplace here, this is the daily liquidity that was taken out. This was the daily liquidity that was taken out. If you see, after the daily liquidity is taken, how much volume it was pumping out, how much volume it was pumping. Because simply, as the daily liquidity was taken, we should look for the buys. Because the sell side liquidity is taken out, right? So, where we should sell the market? Where we should sell the market? Simple. We can use fib from the top to bottom and just mark the liquidities. This was the liquidity that was supporting with the fib. So can I say this is a clean sell because just because the liquidity was taken out, that's why this sell came. Everything in the market is very objective. It will become very objective when we combine it with the liquidity concepts. The liquidity is the very important thing in the marketplace because without liquidity there is no move in the marketplace. Without liquidity there is no move in the marketplace. Every move in the marketplace is the liquidity. Every move in the market is the liquidity. Backtest guys, backtest this stuff. Almost not many people will do this, but these are the traps that are induced by the market maker. See, every huge move. Can you see this move after this liquidity was taken out? Because simply the liquidity was taken, so that's why the move came. Simple guys. Liquidity. But this is how I'm explaining how to trust the liquidity. Here in this scenario, for example, the daily liquidity got taken out. We should look for the buys. We should not look for the sells in this liquidity. Why? Because it is not aligning with the daily time frame liquidity. Right? This is what I am trying to explain in the stuff. This is how we combine the liquidities. As the daily liquidity is taken out, we should not look for the buys until it came to 50% above the fib. Until then, we should look for the buys. This is the premium discount liquidity levels. Premium discount liquidity levels, I call it. Same. See, we should be again. This is the very clean buy opportunity here because the both liquidities are aligning each other. The daily liquidity is aligning with the previous day's internal liquidity. We can target the high of the day. Simple guys. Again, we got another buy opportunity here that is aligning with the daily liquidity. Clean guys. And also mitigated this order block. Lot of confidences. 50-point stop loss, target the nearest high. See, this is how again buy side. If the liquidity is aligned, it is a very high probable move. The liquidity is aligning each other. It will be a high probable setup. It will be a high probable setup because the liquidities are aligning each other, right? That's why it will be a high probable setup. Again, here now, the price hit the 50% mark and took the highest from the liquidity. That's why this sell is happening. This sell is the nearest liquidity. This is the nearest liquidity, right? We should target this liquidity. This is how we ping pong markets buy and sell like this, while understanding the high time frame liquidity and aligning it with the short time frame liquidity. See how we avoided these two trades, because if it worked here, but in the long term, you will take more and more losses if you trade against the smart money. This is how I understand the liquidity. See, in the span of 1 week, how many RR we got? 5, 13, 18, 23. Yeah, we almost got 30 RR in a week. If you risk 0.5%, it's 50% in a month. It's life changing month. If you want to learn this stuff, I'm currently only teaching the one-on-one. So drop a comment. I will pick you. Peace, guys.